Hi everyone, welcome back to my channel Achieving Alpha, and in this particular video we are going to talk about a small cap that has given over 18,000% returns roughly in the last 20 years. Now it's not a very popular stock and it's listed only on the Bombay Stock Exchange and not on the National Stock Exchange. The company is a specialty chemicals distribution and manufacturing company established in 1990. Now one quick word of advice before I talk about the stock. Small caps are generally risky bets with a high risk and a high reward. So I highly advise you not to have heavy exposure to them and manage your risk and portfolio accordingly. With that being said, let's go and have a look at the stock. The name of the company is Black Rose Industries, and you can see that in today's trading session, the stock is up by more than a 5.5%, and that's really great. In 1 week, the stock has given you roughly returns of over 3.18%. If I talk about 1 month, the stock has been corrected by roughly 4%, and in 1 year, the stock has given you good returns of over 28%. In 5 years, the stock has given you multi-bagger returns of closely about 850%. And if I talk about the all-time returns, now on ticker tape, there is some mistake. The data is available only from 2008, but I checked on Google, and according to Google Finance API, the stock is listed on BSE since 1997. And from 1997 till date, it has given you returns of more than 22,000%. Now, 18,000% is something which is what I mentioned, but the stock has given you a return of more than 18,000. To be specific, 22,000% of returns in roughly about 23 years. That's really great. Now, let's talk about the financials of the company. If we have a look at the profit and the revenue, you can see that they have been increasing every single year. And you can see that from 2017 to 2020, the revenue and the profits have shown significant improvement. The profits are almost four times from 5.01 crore to roughly 20.68 crore, which is really great. And again, as I have mentioned in one of my previous videos as well, that the past returns do not guarantee similar future returns, but certainly the company looks really great, and the promoters are also bullish on their company. We'll see soon. Talking about the financials of the company, let's try to read the income statement. So you will see that the total revenue has seen an increase from financial year 2017 all the way up to financial year 2020. Similarly, you will see that the other figures like the EBITDA, the profit before tax, the net income, and the EPS have also been increasing every financial year, which is really good. Talking about the balance sheet of the company, so you will see that the total assets of the company have been increasing every single year, and the liabilities have also been decreasing. So that's really good. Let's talk about the free cash flow. So the free cash flow of the company has increased or has at least been positive. So for a small cap company like this, maintaining a free positive cash flow is really important, and that's what this company has shown. Let's talk about the return on equity and the return on capital employed. So we'll see that it's really good. Both are about 37%, which is really nice. The market cap of the company is only 694 crores. So as I mentioned, it's a small cap company, or rather, I would call it a micro cap company. So it's really risky, but again, you can see for yourself that the returns have been really great, with over 23,000% returns in the last 23 years. That is really awesome. The company doesn't pay much of a dividend, so the dividend yield is only 0.26%. It's a small cap company and it focuses more on its growth. If I show you the holdings, so you will see that uh, the bad part about it is that there are no institutional holdings. So the foreign institutional investors hold only 0.26% stake in the company. The mutual funds and domestic institutional investors do not hold any stake in this particular company. The promoters are really bullish, so they keep a holding of about 75%, and it's just less than the mandatory norm by SEBI, which is that the promoters need to have a holding of less than 75% within 3 years of listing. So the promoters look really bullish on the company, and they are really optimistic about the growth of the company. The same can be seen in the stock price over the years. Let's try to have a look at the delivery and what sort of deliverable quantity have we seen. So the volume on BSE is generally less, but so the delivery is generally high. But you will see that since 1st of February to till date, which is 5th of March, you can see that there has been a very strong delivery in this particular company. So the delivery percentage is right in front of you, and you can see that the stock has seen really healthy delivery. Again, the volumes are really less on BSE, but again, still you can see that there is less speculation in this one particular stock and more of delivery percentages. With that being said, let's try to calculate the CAGR over the years. So as I mentioned, I have done this plenty times, and I think you are all familiar with the formula for the CAGR calculation by now. So after doing the calculations, you will see that the company has given you a CAGR of over 24.27% in the last 24 years. That is really great. And let's try to see what would have been the consequences had you done a lump sum investment 23 years back, or let's say even an SIP of just rupees 5,000. So according to the CAGR we just saw, if you would have done an SIP of 5,000 rupees per month for 23 years, your return would have been more than 6 crore rupees as on date. And if I talk about the lump sum investment of, let's say, rupees 1 lakh, so that would have been more than 1.48 crores as on date. So it's really great. The company is looking okay with great business fundamentals and strong promoter holding. And you can certainly consider long term investment in this particular company. But as I mentioned, it's a small cap stock, and then you should also manage your risk and portfolio accordingly. I would personally recommend you to keep only that much exposure to this company, which might not be disastrous to your financial health if at all the stock goes for a toss. So I hope you like this particular video. That was just a small video talking about a company, because such companies are not much known to retail investors. And yeah, I think it would be useful for you to know about this one particular company. I hope you like this particular video. If you did, please consider pressing the like button and subscribe to this channel for more such content. Have a good day ahead.